Welcome to the Stockscores Market Minutes for January 17th, 2012. This week's topic, gauging conviction. When we look at the market, we can see one that is essentially drifting higher, but there seems to be a lack of conviction among the buyers. Looking at this chart of the S&P 500, you can see that while the market has been moving up for all of this year really, the volume has been pretty light. I've circled that in red. And that is a sign that the buyers are not really all that enthusiastic. I think the market is going higher more than anything because there are a lack of sellers. Now the trend is up, and so we should remain bullish, but a market that lacks conviction can go down very quickly if there is some bad news. The TSX has also broken its downward trend line, but has more or less kind of grinded sideways over the last few weeks. Again, there is a lack of conviction. You can see that the daily trading ranges, which I have circled, are pretty narrow, and so the market is often closing near where it opens. That is a sign that there is not a strong opinion among either buyers or sellers. The chart for gold has been moving up and in a very short term looks strong, but it is coming up to that long-term downward trend line. And so if you are a buyer of gold or an owner of gold right now, I would be somewhat cautious as that market is coming into some resistance. However, I think that if you are long the junior gold stocks, these things have been doing very well, and really they underperformed for a long time, and now we're starting to see some life come back to some of those stocks. So I'm not really against the gold stocks so much as I am just cautious on gold itself. The VXX, of course, represents the VIX, which is often referred to as the fear index, and normally it goes down when the market goes up. Well, the market has been going up, and the VIX has actually been inching higher for the last 5 days as well, and I think this explains why there is a lack of conviction among the buyers. You see, there is some fear creeping into the market, and that has acted like almost of an anchor on the buyers' actions. I think we need to watch the VIX. If it can break down through 30 on the VXX ETF here, then we're getting that fear coming out of the market. But I would remain a little bit cautious when you see the VIX going up with stocks. It sort of sets us up perhaps for a pullback in the overall market. Oil is in an optimistic ascending triangle pattern, which is relatively positive if you are long oil, but relatively negative if you are interested in stocks, because of course if oil goes up too much, then that hurts the overall economy. So it's sort of a double-edged sword when you look at the chart for oil. This is an optimistic chart, but until it breaks through that red line of resistance, we shouldn't get too excited about oil going higher. Catalyst for that breakout would obviously be things happening in Iran, where there was a pullback in production out of Iran, or if oil through the Strait of Hormuz is curtailed, then that's going to affect the price of oil, obviously. So I am optimistic on U.S. and Canadian stocks, but somewhat cautiously so, because I don't see that real strong conviction among the buyers. The market is drifting up as opposed to being pushed higher by aggressive buyers. Gold I am neutral on. I think it could have a few more up days, but it's going to run into some resistance soon, and so we should have some caution with that. And oil, because it's in that neutral pattern below resistance, I am also neutral on that. Basically, markets are drifting up without conviction, showing that there is something of a precarious state of optimism. There are a lack of sellers out there, and that's helping stocks go up, but there will be more sellers coming out if there is some bad news in the market. Well, that has been the Stockscores Market Minutes for January 17th. Have a great week in the market and trade well.